reports titled "Turning the Corner Now, Stronger Cycle Next Year." Is this about 5G?
Well, I think the move in the stock right now is perhaps a combination of both. And we'd upgraded the stock back in July under the premise, under that 5G premise. And it was interesting at the time, the pushback was the call was probably too early because people were cautious on this cycle. Frankly, the reports now were better than we would have thought 3 months ago. And so I think that's what's created the squeeze here, where I think people do want to own it for the 5G cycle. They weren't expecting this cycle to be quite as strong as it was, and then here we are.
Amit, do you agree? And what can you tell consumers, really, not so much investors, about 5G that will make them want to upgrade?
Yeah, I would say 5G is more of a sideshow to the Apple narrative, not the main part. I guess for a consumer, you can get Netflix downloads in 8 seconds instead of 40, which in theory wouldn't be the biggest reason for you to buy a 5G phone ever, but I think that's the pitch. To me, Apple is not about how you can grow iPhone units. It's about how you can monetize the 900 million plus install base. And what you saw last quarter is something you'll see going forward, which is iPhone units could go down 8, 9, 10%, but Apple can grow revenues and EPS on the heels of services and wearables narrative. To me, that's the real story for this year, for next year, for the next 5 years in Apple.
Chris, how are you thinking about that balance between iPhone, given the fact that, like it or not, it's still lion's share of revenue versus the services story?
Right. And personally, we were not part of the services bull thesis for the last year. And it's just a simple function of math that how big iPhone is. I agree that services could be a driver in the context of a stable or improving iPhone. And then again, that's the difference between last year and this year, is that you've seen some stability in iPhone, which allows services to kind of come through. But it's not going to happen without iPhone showing some growth, which again we think happens into the 5G cycle.
Amit, was there anything that disappointed you in the numbers or in the commentary yesterday?
I'll say two things, and they could be debated as potential levers for upside. One is the December quarter guide, which, while good, is up about 36% sequentially. That number is only 200 basis points better than what they did in December of 18, when they negatively pre-announced, by the way, right? So the guide, I would argue, could be much better over time. The second part is, despite all the leverage you're having in the model, gross margins are guided to be flat on a sequential basis. That's a bit of a disappointment or a source of upside eventually. That will be debated.
Chris, $250 for new AirPods, these AirPod Pros coming into the holiday season. Given the fact that we did see such strong growth in wearables overall in the last quarter, how important is that to the story moving forward?
It's small, and I'd kind of put that into the category of, sort of everything else that Apple is doing well. And again, go back to the original point, is that there's a bit of a law of large numbers problem with iPhone being as big as it is. They need multiple hits in order for anything new they bring to the table, be it AirPods or Watch or other services they bring to be impactful. So I think all of these things are helpful going forward. I'll also add that as we go into the next cycle, one of the biggest elements in services is actually Apple Care, and of course that's tied to units as well. And that's perhaps why we saw some flattening of services over the last year as units started to decline. I think as units start to improve again, and perhaps as ASPs get a little lift as people buy some higher end phones, that adds to Apple Care, which helps the services as well.
Amit, you got to feel good about what they said regarding China and trade uncertainties and, I guess, consumer uncertainties there. How much of that surprised you?
The stability in China is absolutely a surprise, because if you think about 30 days getting into the sprint, the risk was Huawei picking up a lot of share, especially in China, and what that could mean to the model, right? So I do think that stability was a good sign. I think Apple trade-ins seem to be doing really better, which is what's helping the iPhone inflection as well over here.
Chris, we got Apple TV Plus launching tomorrow. So far, it's been some mixed reviews on some of these shows that are going to be debuting with the service. How are you factoring that into your forecasts moving forward, if at all?
Well, we talked to the company about that last night, and the way we look at that is that's more of a long-term investment. And one of the actually things that did surprise us with the report yesterday was the OPEX that increased as you go into the December quarter. Part of that was because of the launch of some of these services. And Apple TV, TV Plus, for one example, it requires a big investment. You know, they're doing new content. You know, some of the big name stars they're having aren't working for cheap. So, you know, I actually think over the next year or two, you know, some of these new services will take some time to kind of come to profitability. But in the other sense, some of the things they invested in years ago, like iCloud, for example, is actually starting to get some leverage. That required about 2 years ago a very large investment in data center, and now you get leverage on that as more people come to the service. So, you know, again, I think it's a good story. I just have to think you have to put it in context and make sure you have the proper time horizon when you're going to get a return on that.